Hello and welcome back. It's now 9:28 or 8:28 GMT time, and as we know from looking at the economic calendar this morning, we know that the Great Britain Jobless Claims Change is due out at 8:30 GMT time, which is 9:30 UK time. So the report will be due out in 2 minutes. And we'll just be taking our positions in preparation of the report coming out in 2 minutes. As we can see, here's the pound dollar, which obviously the report is going to have a huge impact on this currency pair and also on other currency pairs, but especially on the FTSE and the pound dollar because it's a British report. But like I say, it will also affect other financial markets. So as we can see, I've taken a position just above the first resistance using the pivot points as my indicator. And the pivot points are only used for day trading, and this is a 2-day 5-minute chart. So the 2 days 5 minutes chart. So each candlestick represents a 5-minute period. And if the market, on the release of the report, if the market goes up, I'll buy just above the first resistance, and I've got 20-point stop loss. And if the market falls, I'll sell just below the pivot point. And it's now 9:30, and the report has been released. So we'll see what happens and how the market responds to the economic report. Usually it's a futile attempt trying to predict which way the market will go once the report is released, because it's anyone's guess as to how the financial markets will react to the report. And my saying is that the markets can only go 3 ways: up, down, or sideways. So if it goes up, we'll buy just above the first resistance. If it keeps going sideways, we'll keep out of the market. And if it goes down, we'll sell just below the pivot point. So we'll give this a couple of minutes and see how the market responds and what happens to our orders. I'll have a look at the FTSE. So we can see the FTSE is currently hovering around the first resistance. So we don't have any clear opportunities to trade. We could decide to trade using the higher highs, higher lows strategy, although that's a very risky strategy to use. But basically what we'll do, this is the most recent high of the market. We'll put a cursor just over that candlestick, and the highest point there is 5735.5. So just round that up to 5736. Well, 3735. Just check that again. Sorry, it's 5734.5. Sorry. So the high there is 5734.5. So round up to 5735. So that's the most recent high of the market. So one of the strategies you can use is to buy if the market breaks that high. We can buy at 5737. So that's a risky strategy, but it's a strategy you can use. Again, applying good money management, because you can see the markets went up here, made a high, pulled back down. Then when it broke that high, it made a new high, pulled back, then broke that high, made a new high, then it's pulled back. So you could buy if it breaks that high and it keeps going up. So that's one strategy you could use for the FTSE. But like I say, it's a risky strategy, but it can be used, and you apply good money management. Here we are. This is the Aussie US dollar. Again, you can see the Aussie US dollar. It's trending sideways, so you can either buy just above the first resistance, or sell just below the pivot point. And you can see the 0% Fibonacci retracement just in sight. So that also can be used as a swing trading opportunity. But what I'll do is I'll still buy just above the first resistance and possibly turn the trade into a swing trade. And you can see the first resistance is 9906, so I'll buy at 9908. 9908. Again, with a 20-point stop loss, with a view to turn into a swing trade if it keeps going in my direction. So that's for the Aussie US dollar. The Euro US dollar, still in my trades from yesterday. So I've just left those trades running. So this is just trades from yesterday. I've got 2 trades from yesterday and a swing trade, which are all still in place. But in terms of today, again, the market has gone beyond the first resistance. So we're unable to use the pivot points to trade in terms of a trading strategy. Again, we can use the previous high at that point, but again, that's a risky strategy to use. And the high there is 14,000. So we just put out 14,001. Obviously, the market then develops a resistance at that point. You could then use it as a point of entry into the market. So for now, we'll just mark that point, and we might then decide to use it later. Obviously, the moving average 50 is still below the first resistance. So the only point of selling will be just below the pivot point. When the moving average 50 moves above the first resistance, then we can then use the first resistance as a point to sell. But because it's currently above the moving average 50, we can't sell just below the first resistance. So the only opportunities to trade the Euro US dollar now will be to either buy if it breaks the previous high, which is a risky strategy, or to sell just below the pivot point. We'll have a look at the Wall Street. Now for the Wall Street, you can buy just above the first resistance. Normally you don't trade the Wall Street prior to 2:30. That's when the market officially opens. But you can, in exceptional circumstances, trade it before then if a report such as this has just come out. So in view of the economic report being released, you can trade the Wall Street because that also affects Wall Street, and we'll be buying just above the first resistance at, there we go. So again, we'll be buying 2 points above the first resistance at 11,083 with a 20-point stop loss. And we're back to the pound dollar. So that's our order for Wall Street just been taken. And we're still waiting for the pound dollar to make its move. So we can see that the pound dollar is there's still indecision in the market regarding the pound dollar. But we've already made a plan to buy just above the first resistance if it goes up, or sell below the pivot point, and in between we'll keep out of the market. Okay, so we'll just have one last look through the markets, and we'll then meet again at the end of the day and see how the trades progressed. Obviously, always remember good money management. So that's the FTSE, but like I said, we've just made a mark there to see if it forms a resistance, but we haven't placed any trade on that. Again, it's the whole aim of trading is to identify good trading opportunities. And if there are no good trading opportunities, you don't trade. So for instance, we've missed buying at the first resistance for the FTSE. So we've missed a good opportunity there. That's a risky point to trade now. So we're going to leave FTSE alone, but we'll leave that mark there. If it then forms a resistance in the market, then we can use it, but not now. So it's only looking for good opportunities to trade. For the Aussie US dollar, we've identified a good point to trade just above the first resistance. So we'll see what happens to that. Again, the Euro US dollar, same thing. The market has gone beyond the first resistance. So we'll make the mark there to see if it develops a resistance in the market. But again, it's a risky place to trade for now, so we will not place a trade. And the only safe place to sell would just be below the pivot point. And Wall Street, that's just taking the buy order just above the first resistance. So we've got a 20-point stop in place and a 60-point profit limit. So we'll see how that trade pans out. And the pound dollar, we're still waiting to see what happens. So happy trading, and remember, good money management.